Hello, good morning, traders. Welcome to today's live session. I want to specifically appreciate all of you for joining today's live session. And in today's live session, I just want to share something very, very significant with you guys. And this is something I've taught before, but then you can still go back through it and find valuable insights that will help you in trading. Now, for those of you who are joining us for the first time, or you are seeing this live session for the first time, just let me know where you're watching me from, and I'm going to acknowledge it immediately. Kindly type it in the comments. Thank you, Peter. Good morning, all, for joining. Let's have everybody join before I continue with the explanation. If you joined, maybe later you can take some time and watch the recordings are going to be right on my YouTube channel. I want to show you how breaker block works because most of you just hear about these concepts and you probably don't know how to bring them into your charts and even take trades with them. All right. Trading is a combination of so many insights that, okay, I can see people from Sudan, people from Nigeria, Ilorin, Kano, Enugu, a lot of countries are here. Good to see all of you. Good to see everyone. I'm excited to be having this session with you. Let's have more people join. Then I continue with what I have for you this morning. And don't forget, make sure you give this video a like, share this video, the live session. If you're in any community that allows you share link, go ahead and share this live session with other people to see. So let's go into the explanation proper. So you probably are just watching this particular screen and you're just seeing this particular trade. You're wondering, why am I considering a buy here? I actually have two trades right here that I want to focus on. One is on Aussie USD and the other one is Euro JPY. The Aussie USD on the 1 hour time frame. I'm looking for an opportunity to go bearish once price trades into my key area. And on Euro JPY, I am looking for an opportunity to go bullish once price. Okay, I'm already bullish on it. It's a trade that has been activated already. I hope this trade is going to play out perfectly. It's a swing trade. What swing trade is basically you taking a massive giant step in the markets. That's what swing trade basically means. For those of you who don't know what swing trading is, you trading on the higher time frame, swinging one level to another. That is exactly what it means. So why am I taking this trade, and what did I see that is so unique about this trade that made me to take the trade? All right, that made me to take the trade. Now this is what I saw. I started from the higher time frame. Top down analysis has always been my favorite, and every time I am taking trade, I don't ignore it. So I started from the higher time frame, and then I dropped down to the lower time frame where you see it here. Okay. Please make sure you join quietly. Thank you everyone for joining. Thank you for seeing all of you. I'm happy to see all of you join the meeting. So let's have it again. I said I started from the daily time frame. Now, what do I have on the daily time frame before considering this as a buy opportunity? Now, look at this. Remember, I told you every time you're doing top-down analysis, if you come to your chart, look at the price action and have reasons why you should go into the markets. Without a reason, then you're obviously going to waste your time. And for those of you who don't know how to analyze the market, you can either go through my YouTube channel or subsequently I will show you what exactly you can do. So look at this. What do I have on my left hand side? If you can see this, kindly type, what do I have on my left hand side? I just want to see somebody type. Let me delete this so I can have a very clear chart. What do we call this? Please type it in the comments so I will see. What do we call this particular institutional reference point? What do we call it? That's a fair value gap. Thank you very much, Emmanuel Meremveli. That's a fair value gap. And what do we expect price to do? To react from a fair value gap. Beside it, what do you have? What do you call this? What do you call it? I just want you to type order block. That is correct. Order block from Emmanuel. Which broker am I using? I use Bybit and Handtake Markets. And one thing with Bybit, now Bybit has inculcate even currencies for trading. So you can take advantage of that. If you want to register and sign up with Bybit, the link is in the description of this video. Sign up with Bybit. And if you sign up with my link under Bybit, just send me message through WhatsApp. I'm going to add you to the free Telegram community for signals. But then, because you asked for the broker, Bybit has everything. So I take the trades from Bybit and Handtake Markets. And if you want to register with my link, just check the link in the description of this video. So an order block and a fair value gap is what we have here. And what do we call this? Can you recognize this area? What exactly is this? I just want to see that some of you are actually understanding what it is to do analysis in the market. What do we call this area I just delineated? What do we call it? Not institutional reference point. Liquidity, Emmanuel John. That is liquidity. That sell side liquidity resting. Sell side liquidity resting. Price have traded below the sell side liquidity. Boom. Trading into an institutional reference point. Remember, I told you that when you are doing your analysis, you must be able to bring into context the left hand side and the right hand side of your trades scenarios. The right hand side is telling us that price is trading bearish into a key level, and the left hand side left us with what? A bullish order block and a fair value gap. Now, if you look at this very closely, you will realize that if you drop down to the lower time frame, you will have a context. Now, when I dropped down to the lower time frame, that's the 4-hour time frame. If you're looking at the daily, the next time frame you should check at least is the daily, is the 4-hour time frame rather. Is the 4-hour time frame. So now what do I have? Look closely. There was a very important price action. Look very closely as price was coming. Was there any point that you had a shift in market structure before price traded into the institutional reference point? Look at it closely. Was there any point that price traded into or that price shifted structure bullish on the 4-hour before trading into our key level here? Was there any point? No, that's true. Peter, you have to look at it. Is there any shift in market structure you've seen, Peter? I mean, shift in market structure. That is to change character, change of character. Okay, I should zoom. All right, this is zoom. I've zoomed it. Was there any point? I just want you guys to see it. This is the movement started from here. Was there any point? No. There was no any point that we had a shift in market structure. There was no any point that we had a shift in market structure. Until price traded into this guy, that was when we saw a shift in market structure here. Do you now see it? And every time you see a market structure shift or change of character, as other people call it, or CISD, change instead of delivery, as other people call it, it simply means that price is about to start a new directional movement. Price is about to start a directional movement in a new direction. At the top, where? No, 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 no. I mean, okay, you are looking at it from here. You're looking at it from here, right? Not here. I mean, from this swing to this area. That was where the swing started, right? To this area. Forget about this one. All right? Forget about that one. So as price was coming, this was the only place we had it. And what do you see? Price left you with this. Now, I want to ask you guys a question. What is this institutional reference point called? It's a mitigation block, right? Is that a mitigation block? I want to see who has been following the smart money concept correctly. Breaker block. Beautiful. Is that really a breaker block? Who has another opinion? Who has another opinion? Beautiful. You guys know exactly what you're doing. That's a bullish breaker block, not a mitigation block. It is a bullish breaker block. Why? Because price have swept liquidity below this last low before it shifted structure. See it right here. Can you see it? For those of you who are struggling with market structure delineations and all those things, perhaps you need help. And hence the reason why we have carefully looked at the smart money concept in a very different way. I try as much as possible to give you the ideal pattern to trade with the smart money concept. For those of you who want to join my personal mentorship, the Early Traders Program, for the next 72 hours, starting from yesterday, I think we have less than 72 hours now. The price has been dropped to just $50. It used to be $100. And you're going to have a lot of benefits to it. I'm going to pin the benefits in the first comment of this particular video, and then you're going to see all the benefits. But then if you're struggling with analysis, you need to be in the mentorship, because this is something I do almost every day and I seldom do it on a live session like this. So for those of you who want to sign up, and on the purchase end, you will use this discount code ETP50. Those of you who are in Nigeria, you can send me a message via WhatsApp and then I'll show you how to go about it. You may find difficulty in doing that. All right. So let's continue with our session. So look at this. Price has shifted structure and has left us with a bullish breaker, which is this last bullish candle. And look at this closely. What else can you see as a confluence close to it? What else can you see as a confluence close to it? Please, I want you guys to tell me, what else can you see as a confluence close to it? I want you guys to tell me. You don't have to worry if you don't have $50. It's not something you should. All right. What else can you see? Fair value gap, Vijay Kumar. That is true. A fair value gap is very small. You have to open your eyes to see it. You have to open your eyes to see it. This guy, very small. You see it? Can you see it? If you can see it, let me see you type, yes, I can see it. Type, yes, I can see it. Have you seen this small fair value gap? This one. Have you seen it? Yes. Beautiful. Beautiful. That fair value gap has been the point for price. Has been the point for price. The reason I would have, now look at this. The dynamism of trade sometimes amazes me. If I am doing premium and discount, currently I don't have reason to take it here. But because if I look closely, fair value gaps is one of the biggest, is a very big deal for smart money. Look at throughout this price action. Do you have any fair value gap here? Do we have fair value gaps here? No, we don't have fair value gaps. And then this is the only fair value gap that we have here. And probably this one, and it has been filled up. So this could be the ideal place for your trade. This fair value gap. Why? Because it is confluencing with the bullish breaker block. And if you were to take your trade from there, it's a swing trade. That means you have to do your risk management correctly. The swing trade simply means you taking it on the higher time frame and targeting something bigger. All right. You're going to be in this trade throughout what? Let me show you. Draw on liquidity 1, draw on liquidity 2, draw on liquidity 3, and draw on liquidity 4. So this is how the swing movement is going to be. All these ones is going to fill up all this liquidity area. If you are in this trade, that is what you should expect to see. Another final confirmation. Who wants to hear about this final confirmation? This is part of what I teach in, yeah, I'm in premium, bro. Mohammed, yeah. Consequent encroachment of the bullish breaker. Yes, that's true. All right. Now look at this. It's not we call it the mean threshold, rather, not the consequent encroachment, right? Namdi Samuel. It's called the mean threshold. Mean threshold. All this English, I don't want you to just confuse yourself. It's called the mean threshold. Threshold. It's called the mean threshold. If it is a breaker block or bullish, a breaker block, mitigation block, or the block we call it, the middle of it is called the mean threshold. It's not consequent encroachment. So this is the reason why I am in this trade. This is the reason why I am in this trade. All right. 50% is best take. Yes, it's best take, but because there is no fair value gap below, it's going to be difficult for you. You may miss this trade. Sometimes, if you want to be part of the trade, you have to be swift enough to take the trade and then use your understanding and manage your risks. All right. It's a nice setup, Emmanuel. A very nice setup. And this is why I brought it before you guys to see it. It's a nice setup. I actually, um, let me show you something. Share screen. Let me go to entire screen. I just wanted to show you guys something so you can see. It's not that I just took the trade. Beautiful. So I actually shared it in the community this very early morning. Not today alone. Yesterday I shared it. Before taking it, it's there. And since yesterday, I said massive swing trade about to start. Here it is. This is the mentorship community. Very detailed explanation of videos are given 3 times in a week. We do live sessions like this, and people catch setups like that. It's not often I send setups there because this is a mentorship. I don't value people just using and looking for signals alone. And for those of you who want to really, really join Signal community, I have the crypto Signal community. It is also there for you guys who trade crypto. And now that Bybit has currencies, maybe we'll join it. This is free. All you need to do is to sign up with my Bybit link and then send me a message on WhatsApp, and I'm going to add you up. But then this is the trade I am currently in. It took me right at that point. Now, the thing is this: what loss size did I use? What loss size did you use, or how do you manage your risks? Very important. Managing risks is extremely important. You have to look at, if you are to take this trade, let me show you the stop loss. The stop loss is about that's like about, this is okay, that's like almost 56 pips. Is that 60 pips? 56 pips. All right. That's the stop loss, 56 pips. And it's a swing trade. That's why it's called a swing trade. Now, if you are to take your trade initially with 3 standard lots, all right, because of this big stop loss, I want you to slash it to maybe 1 standard lot or maximum of 1.5. Or you can use babypips.com to calculate your position size based on what you have. Come to babypips.com, come to tools. You can see position size calculator here. For those of you who are just new here, position size calculator, your account is, let's say you have a funded account of $203,000. $203,000. You've made some profit on the funded account or maybe challenge, you're risking 1% of your account. Your stop loss is 56. All right. And the currency pair, you select the currency pair here, Euro JPY. Let's see, do I have Euro JPY? Where's Euro JPY? Is what? Okay, this is it, Euro JPY. Current price. Do we need the current price? Okay, let's put the current price at that point. Let's say the price of the entry is going to be 157.645. 157.645. That's the entry price. Calculate. You can go up to 5 standard lots for this entry according to this. And you're risking $2,000 for the entry. That's 1% of your account. $2,000, 30, $2,030. That's the risk you're exposing yourself for one this thing. And if you're going to end up getting this, I think any challenge you're taking, if this trade delivers, you're going to be in massive profit. Do you now see it? Does that make sense to you? Does that make sense to you? If it makes sense to you, uh, on 1 hour chart, forget about 1 hour charts. All right. 1 hour chart. Unicorn, yes, that's a unicorn entry model. It's a swing trade. I'm not doing day trading. That's why I don't want to go down to the lower time frame. I just want to play out on the higher time frame. All right. Whatever will happen, let it happen there. I don't want to miss it. If you go to the 1 hour, you keep reducing the movement, the energy of the movement. Besides, even on the 1 hour, you can see that price have traded into this particular fair. Okay, it has not traded into the fair value gap, but whatever will happen, I will still be in the trade. I just want to be the guy that takes the swing at the right point and then allow the rest to be done by price. That's the only thing I want to be doing in the market. So I want to stop from the 4 hour, and that is the swing. I'm not teaching, this is not day trading, it's swing trading. That's why I mentioned swing trading. All right. So my stop loss is below here. So whatever is going to happen is going to be just within this area. So I'm risking 1% of my account taking the trade. If I end up getting this, that's like 1:4. It's a swing trade. It will take me days before it delivers, maybe a month or maybe 2 weeks, 3 weeks, depends on how price delivers. But what you should be doing is ensure that you are doing the right thing. All right. On MetaTrader, uh, yes, you can trade with any amount, even if it is $10 you have, you can trade it. Just do your risk management on baby fees. For those of you who want to join my mentorship, it is now $50 for the next 42 hours. $50. The link is in the description. The early traders program is earlytradersprogram.com. Come to the website. This is the cost right here. It's supposed to be $99, but then we have reduced the price to 50% for Christmas or December sales discount. 50%, that means you are gonna pay just $50 for those of you who will take advantage of it within the next 40. That's just less than 48 hours, less than 48 hours, or 48 hours thereabout. That is it. So let's go to the next trade. Okay, the last thing I wanted to show you, even though this is part of my I teach this mostly to my paid students, but let me show you. One final confirmation is that for me to take this trade, I saw this. This is, do you remember this? If you remember this pattern. So if you are taking a buy, you look up, if you see a bearish breaker and here a bullish breaker, the chances that that trade will work becomes somehow higher. All right. If you have a breaker on the upper side and the downside, is the last confirmation you need to take the trade. Does that make sense? Look at this. Do I have a breaker here? Do I have a breaker here? Is this not a breaker? If you're looking at this, that's a breaker, right? Or if you're looking at this, that's a breaker, right? And down here, where I took the trade is also a breaker. That's the last confirmation I saw. And just like that, there is an exact situation that happened here. Can you see this exact situation? Price had a breaker here. It went up and a breaker opposing it. That's a breaker, bearish breaker. So that is the last confirmation. Does that make sense? I took my TP up to that level because it's a swing trade. No, I'm not extending it to any 15th. It's just for the shortest time. Once after these few days, it will go back to 100 uh, dollars back there. So let me show you the last one. The last one of them is this one. Perhaps we'll just end the session here. So this particular trade on Aussie USD, I'm also looking at it. I also shared that trade setup. Can you see it on the 1 hour? Does that make sense to you? Can you see it? All right. Can you see it? Okay. So this is the trade. Now, for those of you who want to see more of this, we'll see in the early traders program, but I just decided to show you these guys. And please, if you have any question, let me know in the comment. You can reach me on WhatsApp. Synthetics, I will do synthetics another time. Thank you very much, guys. We've spent 27 minutes explaining all this now. See you in my next live session. Bye bye. Thank you.